Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live. And today is Friday, October 23rd, 2020. We are again in the final hour of the trading day and the final day of the trading week, and it's been a wild week. The last hour of the day is my favorite time to make my buying and selling decisions for my swing trades. During the day, you have the algorithms and the day traders. They are the ones that are in control of the price. At the end of the day, in the last hour, and particularly in the last few minutes, the large financial institutions come in. They have very smart people dealing with the most money, best information, best technology, and they start putting their money to work at the end of the day. And I feel like it really is an advantage and an edge in your trading to follow what the large financial institutions are doing at the day. Doesn't always work, obviously, but like anything in trading, you just need it to work a little bit more than it doesn't work. So thank you all for coming today. I appreciate it. It's always nice to see everyone. I appreciate that we have this group and that so many people contribute to it, and I look forward to seeing you every day. I really do. So, interesting market like the rest of this week. Lots of ups and downs, lots of choppy stuff. Currently, the Dow is down 76 points, down 0.27%. The Nasdaq's down about 8, down 0.07%, and the S&P is up barely 2.2 points, up 0.06%. So that's the strong index of for the day among the three. All right. Well, listen, here is the plan for today. First of all, we are going to run the U.S. legal disclaimer. We're going to come back, take a look at my current positions, talk about when I bought them, why I bought them, how I'm going to manage them moving forward. I did have a few day trades today, and unfortunately, the streak is over. I did have a slightly down day today, but like Kamal told me a little earlier, all good things must come to an end. I guess so, but it was a good streak. It was a really good streak. I told you yesterday 16 days, but it was actually 18 days. 16 days of this month. Plus, I had 2 days of September. The last 2 days were positive. So 18, it is a record for me. Forgot about those last 2 days when I was looking at it yesterday. So anyway, that's the new benchmark. So, and then after that, we're going to go through the board. We're going to take a look at your positions. We're going to see how those are doing. I see a bit of a mixed bag, but I definitely do see some green along with the red. After that, we're going to talk about trader psychology, my most favorite topic to talk about because it is the most important, the most vital skill that you can learn on your way to becoming a profitable trader. Not vital, but necessary. We have to create a plan, then we have to follow the plan. And to follow the plan, we have to fight our demons, we have to fight our fear and our greed and our emotions. That's the tough part. So I do like to talk about that as well. After that, I have gone down through my watch list. I have gone down through the results of Kamal's scanner. I have some potential end-of-day candidates. So at the end of the day, I'll go through each one of them. I'm looking for 3 requirements before I place the trade. First requirement has to have a confluence or a combination of indicators lining up, ideally on multiple time frames. Each indicator like MACD and RSI moving averages, I look at those as potential groups of buyers coming in. And if you do it on multiple time frames, then you're doubling that. And you'll put yourself in the best position to have a profitable trade if you're in the company with as many other buyers as possible. So that is requirement number 1. Requirement number 2, have to have a good risk to reward. As I always say, you can have a great confluence of indicators, but in the context of the risk to reward, it may not make sense. I will always want to be able to risk $100 to make $200 or more dollars to the upside. And then number 3, always take a minute, think about how many positions you have, think about how correlated the positions are, and think about how much account heat that you have. Best to have uncorrelated positions, the best you can, and ideally different trading approaches that are not all the same as well. So going to go down through that watch list. I'll try to narrow it down to 1 or 2 at the very end of the day. And if something looks good and meets all those requirements, I'll go ahead and buy it right near the close. After that, after the market closes. If anybody has any questions, that's what I'm here for. Happy to answer them. If you have any stock symbols that you would like me to look at today before the close of the day, go ahead, just put them in the chat. I'll do my very best to get to them. Put an emoji by it or an asterisk so I know it's time sensitive. And then lastly, if you have any new additions or subtractions to your positions today that are up on the board, if you could please wait till the end of the day before you give me those updates. So I'm done trading, pressure's off, and market's closed. Hope you understand. Okay, so that's it. I'm going to run the U.S. legal disclaimer, and I will be back in about 40 seconds. Thanks a lot. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, so Kamal is here. Hey, Kamal, good to see you, bud. Good chatting with you earlier. Hey, CJ, nice to have you back. Thanks for the hello all and the smiley. Hello to you. Talal, hey, Talal, nice to have you here. I think that's the first time I've seen you. Hi, Greg. Only swing trade, what about trend following? Yes, I have many different approaches that I use. Currently, right now, I have some swing trades. And I have some trend trades. Trend trades, I consider moving average crossovers trend trades. So yes, I have, a handful of different approaches: mean reversion trades, trend trades, overnight SPY trades, deep dip buys. So yes, and when I go through the positions, I'll show you. But actually, 1, 2, 3, 4 of my positions are trend trades at the moment. CJ says, I've been watching your educational content and applying it to my paper trading. Oh, fantastic. I hope it's helping. Hey, Frank, good to see you, sir. Hope you're having a good day. Hey, Johnson, how you doing? Hi, Greg. Hello, everybody. Hello, Johnson. And you were absolutely right about Disney rejecting the 50-day moving average. Earlier it did, and I was like, that Johnson, he was right. But then again, it was a trend trade. So, over here on my Disney crossover, you can see I don't even have the 50-day moving average on here because my crossover trades don't take that into account. But that was a good observation. Hey, Steve Burns. Good to see you, sir. Always nice to see you. Always appreciate you being here. It's always an honor and a privilege to have Steve Burns here. We really mean that, and I'm sure everyone else feels that way as well. And thank you, Steve, for including me today on your Twitter list. I really appreciate that. Always appreciate that. Dan is here. Hey, Greg and Gossett Trading Group. Hey, Dan. Good to see you, bud. Hope you're having a good day. Steve says AGQ already has a 520 cross under. That was quick. I'm telling you. With those crossovers with the metals, they either go like crazy or they just fail. That's been my experience. There's kind of nothing in the middle recently. You take it, boom, goes down. Take it, boom, goes down. Or take it and boom, just goes up forever. So, and then our gold is right on the cusp of getting out today with the 520 crossover. So that's going to be a photo finish there as well. All right. Well, I'll tell you what I'm going to do. I'm going to show you my day trades first so that the charts don't get too messy. Let's take a look over here. So here's the 5-minute chart on the Qs. We came down, we moved sideways for a while. We've got very close to the 30 RSI. Here, I entered here at 283.37 with this false breakout to the downside, and the V1 entered at 283.37. Initially went my way, and then the next bar just crushed me. I had to get out. So I got in at 283.37 and I got out at 282.45. So that was not so hot tamale at all. Then I came back undeterred and had another false breakout to the downside. V1 bought here at 283.06. This one did start going my way up, 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 rejected the 50-day moving average. I got out of half at 283.69. It moved more than 1.5 ATRs for my entry and then came back to my entry point. So on this trade, when it moves a certain amount from my entry, I took profits here, but then when it got back down to break even, I got it at break even. So that one was a positive trade because I took half the position up here and then got out of the second half back at break even. So I was 1 for 1 there. And then SPY trade. Here we go. False breakout to the downside. Close back above the 200-day. I got in at 344.14. It did go my way, and then boom, we just had a big move down, and I got out with the close below the 200-day. So I got in at 344.14, and I took a loss here at 343.71. Then Kamal and I were looking at the screen at the same time. I like this higher low close back above the 200-day. I didn't want to chase it. I wanted to wait for a little bit of a pullback, and I timed it just right. I waited for a pullback and rejection of that 5-day. I got in here at 343.94. It moved up nicely. I took half of the position off here. Let's see. Oh, yeah. I took half of the position off here just because it moved strong and I wanted to take a little off. So I locked in a little profit there. Then it kept moving up. Then we had a close below the previous day's low. I got out there, locked in profits at 344.31. And at this point, I had a quarter of a position left. I was either going to let it close below the negative 200 or reject the 70 RSI, or if it got too close to the podcast, I would get out. And I did get out just here because we were getting close to the podcast. I got out at 344.95. So that one was a positive trade. It was very low, very small loss today, but still it was a loss, and that's how it goes. All right, let's look at the other positions. Disney, Steve and myself did take Disney here at 127.54. Speaking of crossover trades, trend trades, we took it when the 10 crossed the 50. That was our entry. It is up 48 cents, which is great because it was down the majority of the day. No profit targets yet, but profitable on the day so far. Gold. Okay. So I did buy gold along, and here's Dan. I bought gold at, I moved the lines. I bought gold here when we had the 520 crossover. It was a little extended, so I only bought a half a position. Yesterday at the close, I bought another half a position to fulfill the position. The 5 was still above the 20. So this is my average entry point here, 179.71. The 5 now is 178.98. The 20 is 179.02. So it's possible that the 5 could hang above the 20 here, but very likely I will be getting out of this trade here today. Qs. I did buy the Qs back here at 277.80 with the 520 crossover, moved up, took some profits. Next day we had a big whipsaw to the downside. The price closed below both the 5 and the 20. I got out of half the position here. I took a safety measure, took a precaution, and got out of half. Glad I kept the other half because we had this nice leg up. Of course, I phase out profits at certain points every time it goes up, so I had a nice phase out here. Here, I got rid of half of what I had left with the close below the previous day's low. And I only have a quarter of the position left now, and I'm either going to reject the 70 RSI up here, or I'm going to get back to break even. But this trade, technically a trend trade, has been a good trade. It is positive. And then lastly, SPY. I took SPY back here at 333.82 with the 1050 crossover, phased out all the way up here. Here we had a close below the previous day's low. I got out of half. The last week has been a lot of profit targets. Hit a profit target, come down. Hit a profit target, come down. Hit a profit target, come down. You get the idea. No profit targets today, but same with the Qs. I'm either going to reject the 70 RSI or I'm going to come back down here to break even. But that one's nicely in the money as well. Okay, so that's it. So Disney up, Gold is down. Looks very likely that I'll have to get out of this today. Oh, VIX. I did buy VIX here when the price was about 22.42. I bought VIX calls. It is down 14 cents today. The 10 is still above the 30 on the VIX index, so I am still keeping it. I am down on this trade as well. And then last but not least, you didn't think you'd get away with it, right? Without me talking about the overnight SPY trade. You know, speaking of different types of trades, this is a trade I take every day. I buy the SPY at the close, I hold it overnight, I take the overnight risk. This is from Liz Ann Saunders. She's at Bespoke Invest since 1993. Two approaches. First approach, buy the SPY at the open, hold it through the day, sell it at the close. Second approach, buy the SPY at the close, hold it overnight, sell first thing the next morning. This approach returned a negative 13.9% return. This one over time returned 634.2%. Big difference between a negative 13.9 and a positive 634. Past performance, no guarantee of future results. Doesn't mean because it's worked in the past, it will work in the future. But the blue line, you can see that's the buy the close, sell the next morning. Orange line, buy the morning, sell the same day close. Not even close. The blue line has outperformed bigly, right? So I do use this every single day. It's a bucking Bronco. You have to take the long-term view with this. You just have to look at it like, okay, I'm just buying the S&P. I'm a buy and holder S&P, but just a little bit more active that you buy it to close, sell the next morning. But if you're considering using this, use a small position size, like a 5% of your total capital. You know, if you have $100,000, buy $5,000 at the close, hopefully sell it for $5,000 and a little bit more the next morning. Of course, that's not always going to work. Sometimes you're going to sell it for less than that. That being said, I did have a nice little overnight SPY trade here. I bought yesterday at the close at 344.61 and sold basically the high today at 345.91. So in at 344.61, out at 345.91. So about $1.30. So of course I will buy this at the end of the day as always. Hold it over the weekend and sell it on Monday. Steve says gold already has a 520 cross under. That was quick also. Yep, I know. We're going to have to watch that. It's 178.97. The 20 is 179.01. So, you know, it's possible. It's definitely possible that if we have a little up move here at the end of the day that I could stay in this. Otherwise, gonna get out. But, you know, try to look back, try to be positive. I'm glad I only bought half here, added half here, so my average price was right here. So losing trade, but still happy with the decisions that I made. And it's not over yet. This may close over, or it may close lower. Who knows, right? Gary is here. Hey, bud. Gary, do you have Intel? Man, I didn't notice there was earnings yesterday, and I don't know if you still have those puts that you sold. Man, I'm really hoping that you're going to say no, that you don't have them. Frank has a poem for us. There's nothing like a stock with plans of its own that love to lure you into its zone. It tempts with a promise, a trip to the moon, and just like that, dumps you into a lagoon. Boy, you know, the thing I love about Frank's poems is they're always pertinent to what's going on today. And that's really what's going on today. We go up, 4, 5, 6 bars, and in one bar, boom, comes right back down and takes it all away. There's nothing like a stock with plans of its own that love to lure you into its zone. It tempts with a promise, a trip to the moon, and just like that, dumps you in a lagoon. Oh, that's perfect, Frank. Thank you, sir. That's wonderful. That's wonderful. That's so good, as always. Steve says, Spice chart crash back to earth. Let's see. Oh, goodness. Look at that. Well, if you're dying to get into Spice, as I always say, don't buy up here in the overvalue zone. Now we've come from overvalue to actually undervalued. You know, I might be looking for Spice. I mean, there's a lot of confluence of signals here. There's the 200-day, there's the 50-day moving average, the 100-day, all coalescing right here. So if I could get a nice rejection of that, of those confluences of moving averages, maybe a V1 or a V2, then that would give me a good risk to reward ratio. But always better to buy in value, sell above value, buy under value, sell in value. Just not so great a lot of the time to buy over value and then have to sell back in value. Wow. Big move. My gosh, Steve, huh? This thing is down 21.5% in 4 days. Wow. Feel bad for people that own that. Yep. Gary said Intel chart blew up too. So Gary, I hate to ask, but do you still have Intel? Do you still have the Intel puts? We had earnings yesterday, and you were looking so good. You had about 10 points of protection on the puts that you sold. And I mean, you're still above the $45 strike price, but I'm kind of having a feeling Gary still had it. But anyway, be interesting to see what you're going to do. And if you do have it, Gary, what happened to the P&L? Did it take you under? Did it take you negative? Okay. Well, let's go through, take a look at positions, see what's happening. Apple. Frank has Apple. I didn't trade Apple today, amazingly enough. Frank has Apple from 111. It's 114.68. Apple's had a tough time. Apple's gone from 125 down to 114 in a couple weeks. We are back in the value zone. I was looking for a V2 to trigger today. We have a 520 crossover as well. So, you know, I wouldn't be surprised to see Apple sell off a little at the end of the day if people that were following their 520 crossover adhere to this rule, which certainly some of them do. I would certainly be interested in buying Apple again. Not again, I don't have it, but if we had a 520 crossover, that's a good valid crossover trade or trend trade, if you will. So, but I have to wait for the signal to happen. So anyway, Frank, sorry that it's been down here, but I'm glad you're still in the money. That's what's important. AGQ, Steve bought AGQ yesterday at 46.69 with the 520 crossover. Right now, the 5 has crossed back under the 20, signaling most likely for Steve to get out. That's the signal, was to get in with the 520 crossover. The signal to get out would be the 520 cross under. And you know, with these crossovers, you never know if they're going to go up or down. But the key is, you know, if it goes down today and Steve sells, he's going to take 1.18% loss. Okay, nothing you can do about that. But if it had moved up, Steve certainly would have held like a champion, and who knows, he could have got a 4, 8, 10% move. So Steve is always going to cut his losses quickly, right? It's not about having a high winning percentage. It's just about when you have a losing trade, get out quickly like Steve will, and when you have a winning trade, that takes the other part of your brain to stay in, stay strong, and stick with the profits, risking open profits. So TTWO is Brian. I haven't seen Brian for a minute, so hopefully he's still not in this, but he got in this at 168.80. It's 164.03. It's up a little on the day, but definitely down on the trade. Intel is what we talked about. Man, I'm not making fun of you, Gary, at all. Of course, you know that, but this is just a good example, people, of, you know, gambling through earnings. A little different for Gary because he had puts and he had a lot of protection. But again, you know, it's a quick way to lose money. It's a quick way to make money. It's a quick way to lose money. And obviously their earnings and their forecast wasn't too good. It's down 10.87%. Gary says, I still have the put spread and I am still in the money. Oh, good. I got very good premium when I sold them. A lot of time premium has decayed. I will monitor closely. Yeah, well, it works against you. The price went down, which hurt your puts, but on the other hand, a lot of volatility came out, which helped your puts. So I guess that's why you're still positive on the trade, because maybe they counteracted each other. Frank says, yes, I took half off at 115 on 60. Oh, did you? Did I know that? Probably. I always like to hear people taking off half. Took off one half at 115.60. All right, noted and noted. So that was about $1 higher. Good, Frank. Glad to hear that. Ba-bum-ba. Gary says, just missed the Disney short on 5-minute chart with the rejection of the 5th ATR channel and V1 to the downside. Let's see. Let's see this mistrade. Oh, yeah, right here. V2 to the downside and rejection of the 50. But this is still very strong. You know, I certainly, may have shorted there. I wouldn't short here, that's for sure. All right, HA, Johan, look at this trade, everybody. Johan bought at 1332 with this nice V2, false breakout, double bottom, bullish divergence. This thing yesterday from entry was up 18.66%. It is down 5% today, but considering how much we're up, this is just a normal part of business. I haven't seen Johan, but I'm sure Johan did scale out on the way up. I'm pretty sure. I hope he did, but we'll see. So Johan, if you listen to this later, please let me know, okay? But fantastic trade, my gosh. RBA, Mark bought RBA at 60.61. It is now 61.08. So he is in the money. It's up on the day and he's up on the trade. Walmart, Brian bought Walmart here at 140.69. It is 143.61. It is up on the day and up on the trade. So very nice, Brian. AQN, Mark bought at 15.29. It's 15.67, so it is up on the day and up on the trade. EA, Brian bought EA at 132.70. It is now 126.60. I haven't seen Brian. I would imagine he would have gotten out of this and not held down through this loss, hopefully. But this is what you don't want to happen. You don't want to get into a trade and just let this run away from you, because at some point it's really hard to get out of that loss. Google is super, super strong. My gosh. Gary sold puts down to $1,200. It is $1,632, so he has $432 worth of protection. He's got to have 80+% of his premium already. And earnings coming up, so keep that in mind, Gary. I mean, if you have 80% of your premium, 85% of your premium, and you can only make 15% more, why would you want to gamble through earnings? Not telling you what to do, but that's just how I look at that. LVGO, Frank, been in LVGO at 132.50. Next day it went up, came back down. He got out of half. He kept half. It's up today, and he is definitely up on the trade still. Earnings coming up there, by the way. CRM, Brian bought CRM at 251.20. It's 240. 922. Don't know whether he got out, held in, but I'm probably going to take these Brian trades off the board here because I haven't seen him. Look at this, everybody. Kamal and Steve. Oh, that's right. Okay, Kamal got in here at 269. It is 282.75. It is up $4.64, up 1.67%. So that is a big move for Kamal. That's a 4.88% move. And then Steve got in with a different signal, the 1050 SMA crossover. He got in at 278.87, and he's up just about $4 on the trade. So Facebook very, very, very strong. So congratulations to the two of you. Match, Johan and Kamal bought Match at 111.10. I don't know if Johan's been scaling. Kamal on the way up has scaled out. He's out 2/3 of it. But beautiful trade there for Johan and Kamal. INSG. I think no one has that. I think that was yesterday's computer deal. UPro, Evan bought UPro at 60.59. It is now 60.78. This return to value, sideways movement, V1 wasn't looking so good earlier, but up now. So congratulations there, Evan. UGL. Oh, okay. Yeah, UGL is double leverage gold. Steve bought this here at 71.06. And of course, let's see. And he based it off the 520 crossover. Right now, 178.98 compared to 179.02. So it does look very likely right now that I will be getting out of my gold position because of the 520 crossover, and Steve because he bought the Pro Shares Ultra Gold, the double leveraged gold here, that he will be getting out as well because he was using the GLD 520 as his proxy. DKNG, Yas, Evan, and Kamal bought DKNG at $41. It is $42.50. It is down 1.1% today, but still up on the trade from Kamal's purchase at least of $41. TME, what a trade for Quad. Quad bought this at $14.30. False breakout to the downside in a V1. It is now $14.96, up 1.91% today. Keep in mind that 50 RSI or that 50-day moving average up there, Quad, is a 4.41%. Wow, you guys, some of you guys have such great trades. And Kamal bought the TQQQs at 138.46. It's 137.86. So down. Is that right? 138.46. Oh no, it's 137.89. Sorry, don't want to scare you there, Kamal. But it does look like it's holding halfway. Okay. Dan says, the group robot Steve Burns indicator seems inaccurate about gold. In fact, it is recommending adding gold. Oh, interesting. Steve says, Intel is a great example of how option sellers are pricing in volatility through earnings and how hard it is for options buyer to beat Vega Crush. Yes, true. Steve says, my moving average crossover robot says to get out so far today because of the 520. 520 and TMA are sleeping on GLD, says Kamal. Dan says, oop, autocorrect, mess up my message. Trading view indicator seems wrong. Sorry. Kamal says, Steve Burton still holding that gap. All right. All right. Well, listen, before we turn our attention to look for some new end-of-day trades here, or getting out of current trades, or adding to new trades, or whatever we're doing, let's just turn our attention real quick to trader psychology. You know, I say it ad nauseum. I'm sure you get tired of me saying it, but it's so important that I just want to do it anyway. Listen, you have to be able to follow your plan in trading. If you do not, you are in trouble and you will not make money. I just want to make it as simple as possible. Whatever it takes for you to follow your plan, whether you have to hire somebody to stand over you, with the flip-flop, to hit you with the flip-flop if you do a mistake or shock you. I don't know, right? But I say this in jest, but it's true. So I do like to spend time on trader psychology. This is from Steve Burns. This is, again, from the New Traders Rich Trader thread over on Facebook. If you're not part of that group, come on over and subscribe to that. There's some really good traders in there. It's a serious group. But let's see what Steve has to say. An ego can cause a trader to hold on to a losing trade because they don't want to admit they're wrong. The more people a trader tells about their opinions, predictions, or positions, the harder it is for them to exit when they're wrong. So 2 things here. Yes, of course. Ego is the great trade killer in the stock market. People get a conception of something, they get an idea in their head that this or that has to go to this price. Well, it doesn't have to do anything. It'd be nice if it did, sure, 100%. But, people don't like to lock in losses. If you don't lock in a loss in your mind, you're like, well, I haven't taken a loss yet because I haven't locked it in. If you have a loss, you have a loss. And losses tend to get bigger losses. Trust me, I know this. So first loss is the easiest loss. Get rid of your ego. As a matter of fact, since we're on this subject, this is also from New Traders, Rich Traders. Look, this is Marty Schwartz, Market Wizard. What does he have to say? I've said it before, and I'm going to say it again because it cannot be overemphasized. The most important change in my trading career occurred when I learned to divorce my ego from the trade. We all have egos. We all want to be right, but this is a world famous trader, Market Wizard. Let's see, let's probably listen to what he says. I've said it before, and I'm going to say it again because it cannot be overemphasized. The most important change in my trading career occurred when I learned to divorce my ego from the trade. If you have an ego, you're going to have a tough time. And that's what Steve says. An ego can cause a trader to hold on to a losing trade because they don't want to admit they're wrong. The more people a trader tells about their opinions, predictions, or position, the harder it is for them to exit when they're wrong. How about the people that were like diehard bears and shorts on Tesla? They went on TV. They talked about how bad it was. Do you think that they would have been able to get out of their shorts a little bit easier if they had not told so many people about it? You hear this in the Market Wizards book. Don't tell people about your firm opinions on stuff because it's going to be harder for you to get out. So here we have Steve Burns, great Steve Burns, talking about ego and the issues that that's going to have. And then we have another great trader, Marty Schwartz, telling you the same thing. So anyway, please take my advice, take Steve advice, take Marty Schwartz advice. If you have a loss, don't get into an ego battle. Just take the loss. Get out. You have another trade coming around the block in no time at all, right? So anyway, sorry to go on my soapbox there, but I want this channel to be helpful for you, and I've lived through it, and I don't want anybody to go through that. Facebook's surprisingly strong in this dull market. Yeah, the reason I took that SPY trade was because it was much stronger than the rest of the indexes. I had to go to the store today, and before I left, I noticed that Facebook was so much stronger than everything else. And I said, when I come back, I've got to look for a day trade on Facebook. If you have a market that's down and then you see something that's very resilient or even green, those are the ones, if the market turns around, they're going to go up a lot quicker. And it's exactly what Facebook did. Johan, what is happening, buddy? Give me the news on HA. I've been really wanting to know what you've done on this trade. This has been a monster. Give us the update, would you? Frank says, besides backtesting, why not use more of the option market put-call ratio as an indicator to buy and sell? Well, you know what, Frank? Here we go. This is the put-call indicator right here, as a matter of fact. So when I should have overlaid the S&P, but essentially when puts get really high, really expensive up here, that usually means we're getting closer to a low. When puts get really cheap, counterintuitively, it usually means we're pretty high. Right now, we're, I guess, trending a little bit to the upside there. But this is whenever puts get down into this area, you're usually at a top. When they get up into this area, you're usually at a bottom. And it looks like we're right about in the middle on that now. Talal says, Steve, is Facebook up because sympathy of Snap? Evan says, Apple thoughts. Yeah, so Apple has a 520 cross under today, Evan, which is not a good sign, but it does set up for a new potential up move, a nice possible move up with the 5 crossing back over the 20. So I'm not buying Apple here. One of the accounts I manage, they had calls on Apple. I did sell half the calls up here, thankfully. And this is just a good example of whenever you get a big move up, take advantage of it. And so I locked, I think what I have, 5 calls. I had 5 calls. I sold 2 of them up here, held 3. But again, I always like to phase. But yeah, the 520 is crossing under. That's not a great sign, but it does give us a new potential setup next time the 5 crosses over the 20. Talal says AAP. Advanced Auto Parts. Yes, that's very, very good. That is a V2. Here's day 1. Here's day 2. Day 3. Day 2 washes out day 1. Day 3 closing above day 1's close, and a false breakout to the downside. That's not a bad trade there. That's as a matter of fact. Well, I think it's pretty good. Under 50, over 50, V2, false breakout to the downside is holding the 50 RSI. Yeah, that's pretty nice. That's pretty nice. Talal. Gary says, I have 80% of the premium on the Goog with 432 points protection. I will hold until the 28th and then get out. That sounds good. Get some time decay until the rest. Johan says, been scaling out of HA, now down to slightly less than half of the remaining position. We'll be selling half the remaining position on a rejection of the 70. Fantastic. Evan says, AAPA, not Apple, AAP. Oh, yeah. This is the one I just did, right? AAP. False breakout to the downside. V2, it's pretty good. Steve says that does work that way a lot, Talal, with the same sector, and Facebook is correlated to Snap earnings gap up. Yep. Johan says also bought TME at 1426 and DHT. Excuse me. 1426. Okay, so I've got, so you bought down here with quad. Johan has been having some nice trades. And then DHT. Johan, if you can remind me at the end, and then I'll get that one updated, okay? All right. Disney. Wow. Disney's doing well. No profit targets yet, but Disney's doing well. Let's check on gold. 178.98, 179.02. So it's a possibility. It's a possibility. We'll see what happens. Oh, my Qs and my SPY are up now, so that's good on my trend trades. Johnson says AAP is very close to 50 SMA on the upside. Yeah. So if I were going to be buying this today, if it rejected the 50 SMA, Johnson, I wouldn't buy it. If it closed over the 50, I would. But if it rejects it and closes under, I wouldn't. Now, this can come back to bite you. I was looking at Facebook here, same setup. See how it rejected the 50 and closed under? That's the only thing that kept me out of this trade, unfortunately. So, sometimes you're going to have your signals, they're going to work for you, sometimes they're going to work against you, but no matter what, if you have rules, sometimes they're going to work for you, sometimes they didn't. The only reason I didn't buy Facebook because it rejected the 50. Bummer, right? But I'm glad Steve and Kamal are in, for sure. All right. Intuit does have a pullback to value. It does have a nice little V2 here. There's no doubt about it. It rejected the 50-day moving average. It also rejected it went under 50, over 50, and it has a V2. The only thing that's going to keep me out of this trade here is that there were not enough sideways motion. There really wasn't any sideways motion. Went down, 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 down. This is a kind of trade that, in my opinion, that I've seen very likely. It's very likely to bounce and then fail and then come back down. So I'm going to stay out of INTU. TLT is having a big day here. V1 to the upside, does have a double bottom with the bullish divergence, although this is just about half of this. You can see Kamal, the resistance of the low of the higher range over here. It is making its way back up there, but it's a big move from down below up there, so I'm going to pass on that. Pets has a V2. Right about halfway of this big down bar, so I'm going to pass on that. NXPI has a washout of this previous low and a V1. This does look pretty good, has earnings coming up, so I'm going to pass on that. DPG, nothing really there. I don't like the close of this bar. GMAB, this is interesting. Does have a V1, has a bullish engulfing bar. Rejection of the negative third ATR channel, and a rejection of the 100-day moving average. Let's look over on the weekly. It's there in the value zone. Earnings is next week. This is possible. SE, I don't see anything there. Zen, this is one of those tough ones because it is a V2 in the value zone, false breakout the downside, but no sideways motion. So I'm just going to let that one go. Also, Wing, we looked at Wing yesterday. Was an interesting setup, but I felt like the risk to reward wasn't too good, but did not care, and it just went up. So, but definitely, if I didn't buy it here, I'm not going to buy it here. CRI, don't see anything there. PSTG, it's a V1, rejection of the negative 1 ATR channel below, but not going to do anything with that. INDA, boy, all these charts look very, very similar here. No, don't see anything there. CLB, no. PD, PagerDuty, it is a V2, it is a rejection of the 50, but the V2 day one bar here is much, much too large. It's larger than 1 ATR channel. Very likely this might bounce and, who knows, it goes straight back up. But in my experience, these do not just become Vs. They come up, rally a little bit, maybe come down. So let's see. Honestly, the two that I like best are, let me see, AAP. Oh yeah, and this one over here. So let me do some math real quick on these positions. All right, I've got that one. This one, okay. And then this one here. All right, so let's go through this again. Intuit doesn't have a lot of sideways motion, but I do like the fact that it rejected the -1 ATR channel, went under 50, back over 50, holding the 50 RSI over the 20-day, still has the 10 to contend with. Not a lot of volume to the upside, that is for sure. Weekly bounced, held support at the 1 ATR channel on the weekly, but forming a V2 on a V2, a lower high V2 on the weekly. See, here's day 1, day 2 goes above day 1, day 3 closes below day 1's close. So this is a bearish signal in itself. Okay, AAP. Evan says volume looks slow on AAP. Yes, I 100% agree, and it did reject the 50-day, so that one takes that out of the running. And GMAB, let's look over here on the weekly. It's in the value. Let's look at monthly's definitely an uptrend. Weekly is back into value, and daily does have a trigger here. So I probably like GMAB the best because it's a triple screen situation. So if I'm going to buy anything today other than my overnight SPY trade, it will be GMAB. Let me take a RKT. It's okay. The V1 happened yesterday. Got sold into at the top here, which is not a great sign. Evan, Johnson. Right, we've already gone up and sold off quite a bit. I mean, it's okay. It's okay, but it's not. This is a relatively new stock, so I don't even have MACD indicator, so I don't even really have enough to really give you an opinion. But just this bar here by itself, I don't like. Gold. 178.98, 179.02. So still looks like the cross under. The Qs went positive on my little trend trade there. And looks like we have a V2. You know what? I'll tell you what. What I am going to do is put on a different SPY trade. This is a beautiful return to value, false breakout to the downside, and a V1. That, to me, that's my best trade. It's not going to be GMBA. It's going to be the Qs. So I already have a Q trade, but the Q trade is based upon a different setup with the 520 crossover. This will be more of a swing trade. So, all right, gold 178.99, 179.02. So it looks like I'm probably going to have to get out of gold here. I don't have a lot of time left, so I'm going to go ahead just do that now. But you see the return to value, the sideways motion, the false breakout to the downside yesterday, the test of that downside, and then the close here is 284.19, day one's close. So That's what I'm going to buy. I'm going to take another position in the Qs based upon a different approach. So I am at a gold. Oh man, if this closes back above. All right. I guess I'd have to rebuy it. Wow, Facebook and Match doing fantastic. Way to go, guys. So the close there is 284.19. So it's going to have to close above 284.19 in order for this to confirm. And it's looking like it's going to do that. Tell you what, I'm going to come over here, do this. I'm going to hold out there till the end of the day before I take that last trade. Kamal says, can I interest you in TQQQ? Well, it's the same thing, right? Oh, I'm glad you're up on it now. Congratulations, Kamal. But I'm just going to buy the Qs. I've never traded TQQQ. Not that there's anything wrong with that or anything wrong with that symbol. You're right, though. It would make it simpler, wouldn't it, Kamal? With the do I have enough time? Let's see. All right. You're right, Kamal. I am going to buy TQQQ instead. It's the same setup, and then I'm not going to have the conflicting signals on and make my charts all hard to explain. You're 100% right. Thank you. That was a good call. Okay, so I am going to buy TQQQ just because I'll have fewer charts and because I already have an existing trade. All right, so I'm going to go ahead and buy here. Okay. That is it for the day and for the week. Well, nice that we had a little rally here towards the end of the day, so that was good. So, all right, let's take a look here. Good call, Kamal, for that. Yep. All right. So I got filled on SPY at 345.78, and I got filled at TQQQ at 139.11. Okay, so I'm going to make that one blue for Kamal. because that was his entry price. My entry price over here is 139.11. Oh, well, I got a good little price on that so far, didn't I? All right. Yep. All right, and then SPY. New overnight SPY trade happened at I forgot. Gary and Steve have the weekly puts on SPY. All right, and my new entry there is 345.78 for the overnight SPY trade. Okay, well, what a day. So listen, real quick before you give me your new entries and exits for the board, just want to remind everybody that I do teach private one-on-one lessons in the evening time via Skype. I have a really good course. It's 15 hours, 5 sessions, 3 hours. 15 hours total, 5 sessions. Each session is 3 hours. I teach you everything I've learned over the last almost 25 years of trading. I teach you everything I've learned and practiced from all of my teachers and mentors like Steve Burns and Kerry Lavorne, Larry Williams, Dr. Alexander Elder, and that's the course that I teach. I combine everything into that course. It's one-on-one, it's intensive, we do a lot of repetition. I teach you what I'm teaching you for that evening. Then the rest of the time we go through it and we apply it in simulated trades. We take the trades, where are we getting out, where are we getting in, where's our profit targets, where's our emergency stop, all the different things you need. But essentially we trade. That's what we do in the lesson. We trade and trade and trade and trade and trade, depending on the lesson that I just gave you that night. So if you are interested, please reach out to me. You can send me an email. Email's in the description of this video. If you do reach out to me, I'll reply and say, hey, let's have a Skype call. Skype call's free. I'm not going to try to sell you anything. I just want to get to know more about you. I just want to have you be able to ask me questions about the course. And when we're done, I'll say, hey, great. It was nice speaking to you. Think about it. And if you want to take the lessons in the future, just contact me. And then if you like today's podcast, I would appreciate it if you could hit the thumbs up button. It does help keep the channel around, promote the channel, and let Google know that there's some good content. So if there is something here that is helpful for you, I would appreciate it if you could do that. Okay, now let's see. Okay. So Steve said he exited for a 1.2% loss on AGQ. Kamal, it's triple leverage. You adjust your position size accordingly. Steve says, I exited UGL on the 520 cross under for 2.7 loss. Dan is out of gold. All right, I think we're all out of gold. Kamal says, good trading, Steve. Thank you for showing your losses. Quad says, hey, Greg, I am out of TME and grateful for the profit. I am still in KMX, which is positive, and I'm in Qs. Okay. So, trying to think the best way I should do this. All right. I'm going to do it this way. Quad at 284.62 on today's bar. You're out of TME. TME, why? Oh, here we go. Nice. Oh, I didn't. Oh, I did have you in there, Quad. But okay. Sorry, I did have you in there. You and Johan. So Quad is out. All right. Nice trade. What a beautiful trade. I'm still in KMX. Oh, do I not have KMX on here? Oh, it was yesterday when I had that problem. I bet it will pop up here? Yes, it did. All right, so down a little bit on that one. And you're in the Qs, right? Yes, got you in Qs. Frank says, in the Qs, good setup. Okay. All right. Okay, we've got different trades going on here on the Q, so I'm putting the day that you got in. Gary's in TQQQ. Okay, so Gary has to be green because Kamal is blue. And Kamal bought at the blue line. Gary and I bought here at the green line. Okay. Johan is in DHT. DHT. $5.15. Okay. I think it was most likely on this day here. And then Johan is also in the Qs because he cannot trade that platform. Okay, so let's Johan. Well, my SPY and my Qs recovered nicely. No profit targets, but grateful for that. It was looking a little bleak earlier this morning. Talal says, can you explain why you did not like AAP? I did like AAP. Oh, that's right. I liked it, Talal, if it would have closed over the 50-day moving average. But you see how it already rejected the 50-day moving average? That's the gray line here. If I'm looking for this setup and it rejects, if it goes above the 50 RSI and then closes below, or goes above the 50-day moving average and closes below, if I was in the trade, I would be getting out of half because of that rejection. So in this case, because we have the rejection, I'm not going to enter new trade, because if I was in it, I would sell half here. Does that make sense? Hope that makes sense, Talal, but again, it rejected the 50-day moving average, which to me is a warning sign. But all in all, I mean, nice V2, nice false breakout to the downside, but it rejected the 50-day moving average. So that's why I decided to go with Qs, kind of last minute, because this is a perfect example of a return to value, sideways motion, a false breakout to the downside, and reversal with the V1. Here's day 1, 2, 3. Day 2 washes out day 1. Day 3 closes above day 1, above the 50 RSI. So this one clearly, in my opinion, was the best trade. We'll see. Doesn't have to work out, but as far as setups go, that is clearly the best. Gary says, Kamal, the 2 ATR is adjusted automatically for volatility on the Qs. Yes, that's correct. So, oh, was he asking you or was he asking Steve? But yeah, so if, you know, on the TQQQ, because I just went through this myself, you know, even though it's triple leveraged, the 2 ATR adjusts for that. Let's say I was going to risk $2,000 on this trade. I take $2,000, I divide it by 1607, and that would tell me to buy 124 shares. It's already accounted for the triple leveraged in the 2 ATR value. So if you're buying 9% of something and then you're buying a triple leveraged, if you want to adjust for that, then you would buy 3%, because 3% is equal to 9% if it's triple leverage. But if you use the 2 ATR, you don't have to do that. You just have to take your standard loss, whatever it is. You know, if you're risking $500, then divided by 1607, it tells you to buy 31 shares. It's very simple, and it adjusts for volatility, which I love. All right, so what's happening after hours? Disney's down 19 cents, SPY's down 43 cents, the Qs are down 20, TQQQs are down 28 cents, so, and the VIX, I still have the VIX. Let's see, what does VIX look like intraday here? Yeah, had a V2 there, pretty strong until the end of the day, didn't it? So I like having a little bit of a hedge, right? I've got Disney, I've got Q position, I have overnight SPY position plus a trend trade position. I just bought the TQQQ, so I've got 1, 2, 3, 4, 5, 6 positions. So a little VIX on the side doesn't hurt. And again, I bought VIX because of the 1030 crossover. Now, if it crosses back under, I've got to get out and take my loss on my VIX calls. And Apple did close 520 cross under. So if Apple, I love Apple, if 5 crosses back above the 20, I'm back in. Or conversely, if it doesn't cross, the next area that I will be looking to buy Apple in would maybe be down here near the 3rd ATR channel. We would probably have a confluence of the 30 RSI and the 100-day, which is very rare, but it does happen. That would be an excellent risk to reward ratio spot also. Kamal, Qs are at 5.9 and TQ is at 8.56. Would you not have a good proportional position size using the 2 ATR? I'm not 100% sure. I think I know a little bit what you're saying. Qs are at 5.9. Oh, I have 1104 here, Kamal. Maybe we're talking about different things. I have 1104 on the 2 ATR on the Qs, and I have 1607 2 ATR on the TQs. Sorry, but I'm not clear on what that is. Quad says thumbs up as always. Thanks, Quad. Appreciate that. Dan says yes, thumbs up. Hey, nice trading today, everybody. Look at these positions. Let's just go through them. Okay, Johan's down a little bit on this trade. All right, that's how it goes. Quad is down a little bit on CarMax. Kamal is up since he bought TQ. Johan and Quad got out, but Johan's up beautifully on this trade. Did reject the 50-day. DKNG, Kamal is still up because he bought at 41. I think Yas and Evan bought yesterday and have a slight loss. UGL, okay, Steve's out of UGL. That's the gold. UPro, Evans up nicely, good. Match, Johan and Kamal doing very well on Match. Look at this, what a trade. Facebook, Steve, Kamal doing very well on Facebook. CRM, I think I'm going to just take Brian's off there because I haven't seen him, and we'll just free up some space. Frank is up still on that. Google, Gary's doing really well on Google. Brian, I'm going to take Brian off of EA. AQN, Mark's doing well there. Walmart, Brian's doing well there. RBA, Mark's doing well there. And when I mean well, it's up. Of course, Johan, big winner of the week with this move. Unbelievable, just beautiful. Glad you scaled out as well. Listen, Johan, if it doesn't, it did close under the 70. It went above the 70 and below the 70. So are you still in? I mean, clearly it went above the 70 yesterday, and today it clearly closed below. So if you're still there, let me know. Intel, that was unfortunate, but Gary's still in the money. TTWO, I'm going to take Brian off at TTWO. AGQ, Steve got out with a small loss with the cross under. All right. Good, we freed up some space. Much needed space. Kamal says 5.9 is 1 ATR on Qs and 8.56 1 ATR on. Oh, I see. I don't have the 1 ATR up here. I only have the 1.5 and the 2. But I believe you, but I think when you do the position sizing, because the Qs and the TQs, they're the same, but the Qs are the underlying for the TQQQ. So I think you need to use the ATR based upon what the one you're trading. Single leverage, double leverage, they're not always exactly the same. Sometimes there's a filter in the double leveraged, so you'll have different chart patterns even though they're technically supposed to be the same. Gary says, Kamal, there is a difference in the price, so my understanding was that 2 ATR ranges would account for the volatility given the difference in price. Yes, that's true. Gary says, does that make sense, or am I missing your point? Kamal says, so for a $2,000 max loss, you would buy 169 Qs and 116 for QQQ. Yeah, so let's do the math. So if you had $2,000, dividing it by 1104, you would buy 181 shares. This is what I have, right? 2,000 divided by 11.04. And for the Qs, same thing, $2,000 divided by, gosh, dang it. Okay, TQQQs divided by 1607, you would buy 124.45 shares times 139.43. So that would be a capital outlay of 17,352. And if we came over to the Qs, we take 2,000 divided by 1104, you're buying 181 shares times 284.89. That's a total capital outlay of 51,610. So on the Qs, you'd be buying 51,610. On the TQs, you'd be only buying 17,352. So if we divide that by 3, if it was apples to apples, it's very close. the 2 ATR formula told you to buy 17,352, but if we just do apples to apples between the two, it's a little off, but it tells you to buy 17,203. Yeah, not exactly 3-to-1, just a little off. It was 17,352, and this is 17,203. And what's the other one? 1104 compared to 1607. So if you're comparing the ATRs, it's 1607 divided by 1104. So there is a difference of like 1.5. Johnson says, you all have a great weekend. Thank you, Greg. I learned a lot through this channel. Thank you, Johnson. I'm really glad. We're glad to have you here. I hope you have a nice weekend. If you have any questions anytime, just put them in the chat and I'll do my best to answer, okay? Okay, well listen, it's cold here in Utah. Gonna put my warm clothes on, go out for a hike. I hope you all have a good weekend, safe weekend, study up, maybe read some trading books, read Steve's new trading book, Moving Averages 101, second edition. You can get that on Kindle. It's very inexpensive, and that book really changed my life. So, you know, go spend the few bucks and buy that on Amazon this weekend and read it. That had a huge effect on my trading, and a lot of what I do here is based upon that book. And he was nice enough to let me write the foreword. So if you're a little interested in my background and how I got into trading and all the troubles that I got into, it's there in that foreword as well. Please go out, try to do something nice for somebody today. Just be kind to them. Do them a favor, help them out, maybe just a kind gesture at the very least, just be pleasant. And if you could also do that for an animal today, just if you have an animal, take them on a walk, give them a little pat on the head, give them a little treat, give them a little cuddle, and because they really appreciate it as well. All right, so I think that's it. I appreciate everybody being here. Kamal says, I have to run. I will check that out on the replay of the video. Okay. Johan says, have a good hike, Greg, and have a good weekend. Thanks, Johan. Congratulations on your HA trade, man. I'm really happy for that. But just to clarify, it did go over 70 and under 70. So I don't know if you still have it or not, but regardless, it's a really great trade. Really proud of you, Johan. And be careful up there when you're flying if you've been flying lately. Okay, so that's it. Have a good weekend, everybody. We'll talk to you soon on Monday, hopefully. Bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit, No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.